Well, hi, Linda. Let me start that over again. Well, hi, everyone. This is Linda Baumgarten with the Connecticut Real Estate Investors Association, here with another episode of the Nuts and Bolts series for real estate entrepreneurs. And this series is designed to bring you cutting-edge information from professionals that deal with us as real estate entrepreneurs. And today it is my privilege to interview John Zell from Associated Community Brokers, Inc., or ACBI, as an insurance broker. Hey, John, are you on the call?
Yes, I am.
Awesome. So thanks so much for joining us. I know you're really busy, but I really appreciate you doing this and giving us the information we need. So can you, I think we should just dive right in. What do you think?
No, absolutely. That's great. Thank you.
So for rehabbers, what insurance coverages are essential for buying, renovating, and flipping properties?
What I use is two separate properties. One is separate coverages. One is premises liability for the owner of the property.
Mm-hmm.
This protects in the event they were found negligent for the ownership operation of the property. The biggest thing it does not cover, and we can get into other things it doesn't cover, is it doesn't cover bad workmanship. So that's where we'll talk about certificates of insurance that you get from all of the contractors that names the entity that owns the property as an additional insured.
Mm-hmm.
And then the second policy coverage we use is builder's risk coverage. Builder's risk coverage is the physical damage coverage on the building. That's broken down into two parts. We first want to insure the structure as it exists today, if something were to happen to it. And the second part that's added to it is the cost of subcontractors, labor, and material, because the property is now improved and is worth more money. When we talk about the first coverage, or the first part of the coverage, the existing structure, if you're going to take out the old kitchen, put in a new, do a couple of new bathrooms, when we figure out how much replacement cost is on the existing, we don't take into account the old kitchen and the old bathrooms, because if it has to be rebuilt completely, we're not going to put in an old kitchen, so you put in a new one. So, we may end up being $100 to $150 a square foot based on the configuration of the house for the existing structure, and then we add on the cost of subs, labor, and material. So if we were going to insure a house for $150,000 as it stands, and then the cost of renovations, labor, and material is $50,000, we would insure that house under the builder's risk for $200,000.
Okay. All right, good. And it's definitely something you don't want to scrimp on. So, when you're rehabbing a house, most times it's vacant, and there's a lot more risk that way. But we've had CT REIA members that was just beginning a renovation, and they had a big fire, and they had the proper kind of insurance, and so they were well covered. And so did the contractor, which is why you want to hire somebody that's licensed and insured to do your work, because the contractor also had insurance. They actually did very well on that issue. But if they had the wrong kind of insurance, they would have lost out on, a lot of money for them and their private lenders. So it's really, really important for sure.
All great points, yeah. That's why it's not inexpensive, because the company's looking at an individual renovating a vacant structure with 2 or 3 or 4 contractors running around during the day and then vacant at night. So the cost of those are figured into that exposure.
Good. So good. All right, great. And then what is this is another good question. What's the relationship between what I paid for a property and the amount I have to insure it for as a rental? And I know I deal with this a lot in Waterbury, but in this current market where you can buy properties for so inexpensively, but it would cost a lot more to repair it and to bring it back to life. So what is that relationship?
Yeah, there is no relationship. The easy answer is there is no relationship to what you paid for it as opposed to what it's going to cost to repair or replace. An example I use is if Grandma died and willed to you her house, your cost basis would be zero. You didn't pay anything for it, and here you have a house that you own that you're going to renovate. Well, we wouldn't insure it for zero. Nowadays, we have a computer program that will determine what replacement cost is based on the year of construction, whether it has sheetrock walls or plaster, all the way down the line, how many bathrooms, and then that will give us a fair value of replacement cost in today's market. As we all know, if you went to Home Depot a year ago and bought a sheet of plywood, it's $8 or $9. It's up to $11 or $12 today. Well, multiply that times however much it's going to cost to repair or replace a house, and that's what the cost that's involved in it.
Sure, absolutely. It's a great example. So, and the other question is, can I just make up an amount that I want to insure the building for? So, say, for example, I have a mortgage, I've paid it down, I only owe $40,000 on the mortgage. Can I just insure for that amount? Would that be okay?
Right. No, it isn't. And we would go back to that same question. First of all, in most standard dwelling fire policies where it's not owner-occupied but rented to others, most of them have co-insurance penalties. And most of them would require you insure it to at least 80% co-insurance. And what that means is if the full value of replacing the house today, according to what the insurance carrier says, is $100,000, you can have it insured to $80,000 and still not have a co-insurance penalty. Where the penalty would come into play is you lose the house completely, it's worth $100,000 to rebuild, you had it insured for $70,000, now a mathematical formula comes into the loss. It's did over should. I did have $70,000. I should have $100,000. So in that case, it's 7/10. So you'd only get 70% of what the loss was. If you had a $100,000 house and you insured it for $70,000, you'd get 70% of that $70,000 or $49,000 for what $100,000 is going to take to rebuild that house. So it's a severe penalty. And let's face it, if we needed to go from $70,000 to $80,000, it's probably a couple of $100 extra a year to make sure it's insured correctly, as opposed to it costing you, if we went to $49,000, well over $50,000 out of your pocket to rebuild that house.
Got it. So you really, so how do you figure this out? I mean, I guess you have to depend on people like you, John, to figure out how much you really need.
Yeah, we use a computer program, and I've had a number of people from REIA call me and just say, I've heard you talk, and I just want to know what should I think about how much it's going to take to replace this house, and I'll run through the computer program. Nowadays, I have a good feel for what it's going to take. A house built in 1900 to 1940, we might be $150, $160 a square foot. That same house in Waterbury that happens to be in Greenwich, simply because they're going to charge you for the zip code, could well be $175 to $200 to get a contractor to come in to rebuild it in Greenwich. So it's going to vary based on zip codes as to the contractor and how much he's going to charge to replace it. But we need to have it insured to its approximate replacement cost.
Gotcha. Okay. One of the things I wonder, if, we have houses that were built in 1900 and 1910, and they have beautiful staircases and beautiful intricacies and things like that. If I'm going to build it newly, I'm not going to put all that decorative stuff in there. I'd love to, but it's way too expensive. So can you allow for that?
At times you can a little bit. I think the things we can allow for are things like plaster, because I don't think anybody's going to replaster a wall or a house when sheetrock will do just as good a job. It's tough, Linda, though, to have all that ornate stuff in there, because the only way we're going to determine what replacement cost is to put you back where you were the day before.
Okay.
So we're going to try to get as close as possible. We're not going to get as detailed as the ornamental stuff. If someone says, "Hey, I have a classic home," well, that's going to change my valuation on my computer program a little bit to say, "Hey, we're going to do it with the crown moldings and all of the detail that I want to put it back," and then replacement cost is going to be a little bit more. So that's the conversation I have with the REIA folks all the time is, if and when you have to rebuild this, how are you going to put it back? Are you going to use what would be called functional replacement cost, using today's products in order to rebuild it in like, kind, and quality? Or are you going to go out and get the old woods and the wide beam floors and on and on and on, in which case, since those are going to be more expensive, we can allow for that. But you want that house brought back to its original value as much as you can.
Right, absolutely. All right, so we've handled that. We've handled the rehab life. Let's talk about rental properties. So what types of insurance coverages are essential for properties that I hold and rent to others? What's covered and what's not covered? But, before we switch gears, John, what's the best way to reach your company for a quote? And I guess the other question I have is when is the time? I should say, when's the best time to reach you? So if I do have something I'm buying for, I have insurance for a rental property, how much time before the renewal do I need to contact you to get a quote? Or if I'm buying a property for rehab, how much lead time do you need to develop the quote for the insurance?
In most cases, the lead time would be 3 days. I mean, I could probably get a quote the same day, but some quotes I have to send out and get back. Some of the companies I have to fill out applications, and it takes them a day or two to do the application. So I would like to have 2 to 4 days. If you're closing tomorrow, I'll make sure it gets done, and I'll do it right. So that's about the lead time. As far as contacting me, really 24/7. I'd rather not get a call at 3 o'clock in the morning, but if it's an emergency, I'll take it. But
Sure.
My office phone is 203-254-4587. And, of course, you can reach me on my cell at 203-417-5123. And my email is first initial J, CZEL at ACBI-INS.com. And then the other thing is I'm at every monthly meeting and some of the others in between, so you can stop by the vendor table and pick up information, and be happy to talk to you about anything.
Yeah, that's what I thought. Okay, good. If you go on our website, ctreia.com, and you go into the Investors Corner, go to the service directory, and then look under insurance. You'll find John there also. So
Perfect.
Yeah, so let's talk about rental properties.
Yep.
So what's covered, what types of coverages do I need, and what's covered, what's not covered?
Sure. We would still cover the building, and now we'd be talking about the building as it stands, renovated, or if it didn't have to be renovated. We'd look at replacement costs for the building. We'd also have to consider if there were any detached structures. Sometimes there'll be a garage or some sort of outbuilding that we'd have to cover. Mm-hmm. All of these rental properties are going to include loss of rents, sometimes called business income. The usual way of providing that, the insurance carrier will provide 12 months actual loss sustained. You show them your monthly rental income. You lose rental income because there's some water damage for a month, you'll get reimbursed the 1 month. If God forbid, there's a fire that takes the entire house down, imagine while they're rebuilding your house because we've insured it correctly, you're not going to lose any rent. You're going to get 12 months of rent coming in while that house is being rebuilt. There's also liability. The amount that should be considered is a minimum of $500,000. I would more like to see $1 million. And if I'm dealing with a 3 or 4 family house, the companies I deal with provide $1 million per occurrence, $2 million aggregate total claims during the year for anything that the property owner is found legally liable for. What else? Medical expense is also a good coverage to have, because what that does do is keep the small claims out of court. So the policies I provide has $5,000 of medical expense. If there's a minor slip and fall, or if someone gets injured on a carpet that's not tacked down, the first $5,000 is a goodwill gesture. Get them to the emergency room, get them fixed up. No suit has to be brought. We don't have to worry about the liability if it's contained within that $5,000. Then otherwise the liability comes into play. Equipment breakdown would be a good thing. Lightning is a covered option. If lightning somehow hits the furnace and destroys it, that's always covered. But if the furnace just dies because of wear and tear, and there is some property damage to the furnace, equipment breakdown would provide coverage on that furnace. So instead of having $3,000 or $4,000 or $5,000 coming out of your pocket for a new furnace for a 3-family house, equipment breakdown would provide that protection. So I think it's important protection to have.
If you use that, let me ask you a question because I didn't know about that. If you use that, though, do your rates go up?
It's not necessarily that your rates go up. You have a claim against you, and you have 1 or 2 claims during a 3-year period before the company decides, hey, enough is enough, we're going to non-renew it. And it's the way of the world nowadays, whether it's auto or home insurance. I'll always find another carrier, but that's the other thing that happens. I need to have a discussion with the client to ask them, do you want to put that claim in or do you want to save it? You have insurance to provide the coverage for that incident. We're never going to talk you out of it, but I'd at least like to have a discussion. If the loss is going to cost $3,000 and you have a $2,500 deductible, well, does it make sense to use one of those bullets you have as opposed to let's save it, I'm going to get back only $500, let me pay the entire thing and go on from there. That's where kind of risk management is involved. What claims do I kind of take into account and pay myself, and what other claims do I submit to the carrier? The things that will not hurt you are weather-related claims, and we know we've had a mess of those lately. So the weight of ice and snow, ice coming into the interior because it's frozen and thawed out and there's been water damage. Those weather-related claims are not going to provide any harm to the claims experience. We have the hurricanes and things like that.
Good. Okay. Now, how can I protect myself against incidents caused by my tenant?
Well, as Joanne and you and Lou have always at every meeting said, make sure your tenants have tenant insurance. It's not that expensive to do. The part that's going to provide protection and coverage for you is their liability coverage. As I mentioned, I suggested that the CT REIA folks have $500,000 to $1 million of liability coverage. Well, imagine if your tenant, you require that they have $300,000 or $500,000 of liability, which in the policy itself probably costs them $10 to $20 a year. The person on the 3rd floor overflows the tub. It goes down 3 floors. Nobody has any coverage. Well, guess who's going to have to pay for the damage? It's going to be the property owner. If that tenant up above the 3rd floor had a renter's policy and gave the property owner a copy of it, we're able to put a claim in against the at-fault party that will pay for all the damage all the way down. Now, if we had to put a claim in through the property owner, even though the tenant had a policy, we would then make sure that the property owner's insurance subrogated against the at-fault party, and we would and then that claim would, in essence, be erased because not only would the insurance carrier of the property owner be reimbursed, but also the owner would be reimbursed their deductible. So it's a collaborative process based on the claim. But having that liability policy from the tenant, and it's called a renter's policy, is the extreme opportunity to provide coverage where there is none right now.
Okay. And so when they get that, when they get the renter's insurance or tenant's insurance, do they name the property manager or the property owner as an additional insured?
That's a great question. Try to. Ask the tenant to give you a copy of the policy and a certificate of insurance naming the property owner as an additional insured. More often than not nowadays, renter's insurance policies just won't do that. But the other thing is if you have a copy of the policy, we have at that point the insurance company, the policy number, and all I need to do is to give you an 800 number. You make that first call in to put the claim into that at-fault party, and then from then on, I'm holding your hand. We're working on the claim together. I can't call in that first claim. They won't take it from me. But from then on, it's a collaborative effort working to get the claim resolved.
Gotcha. Okay, good. And I've heard that the best way to get that is if they already have auto insurance, they should go with that company. Is that right? You're
exactly right. Nowadays, like it or not, for the last 20 or 25 years, the state of Connecticut allows people to insurance companies to rate your auto and home and dwelling fire and renter's insurance based on not only claims but on an insurance score. And for lack of a better word, that's a credit score. So that comes into play. If somebody already has their auto insurance established with Allstate or Progressive or someone else, then that's already been done. So getting the renter's policy is kind of a foregone conclusion. It's just going to be underwriting. And by them having the renter's insurance with the same company they have their car insurance with, there's usually a 10 or 15% discount. So it's money well spent. And then the other benefit for the renter, so that the property owner can say to the renter, you know, in your renter's policies, there are additional living expenses. Let's go back to that example where the person on the third floor overflowed the tub. Well, the person on the second floor didn't do anything, but they're forced to move because work has to be done. If all of them had renter's policies, within the renter's policies is a coverage, additional living expenses. You're forced to move out because of a covered loss. Here's X number of dollars to go rent another place for a couple of weeks or a month. Not only that, but to buy you food. So there's a lot of benefit to a renter's insurance policy for a couple of $100 a year.
Right, exactly. Okay. All right, great. And then besides insurance, what other steps can I take to protect my investment?
Now we get into the point of using risk management. And if you think about it, big companies like IBM have risk management departments to protect all their assets, whether it's computers or property. And I think the same thing can be applied to an individual and their ownership of rental properties. You know, things like keeping up the major systems, that they're up to snuff, that someone has come in and inspected, whether it's the furnace or the heating or the plumbing or the electrical, just to make sure there's not anything happening. Small matters like, storing flammables not downstairs in the basement next to the furnace, it sounds like common sense, but it's stored in an area where something won't happen. A big thing that companies have now when they come out and inspect a property I've insured is having those gas grills right against the side of the house. I've seen numerous examples where the overheated grill was left unattended, and all of a sudden the aluminum siding is melting because of the heat. So have them move it out 10 or 15 feet to avoid a claim. That claim's going to come on you unless they have renter's insurance, so be forewarned on that. Certainly check the smoke detectors on a semi-annual basis along with the CO2 detectors to prevent any water damage, to install burst-proof hoses on all washers, and just make sure that the dryer venting has the metal hoses rather than the plastic ones. Even drip pans in water heaters and things like that to kind of get it out of there. We've had some bad winters over the last couple of years, and if you're hiring somebody to do the snow plowing, make sure, first of all, they give you a certificate of insurance naming your entity as an additional insured, but also keep a snow log. If the plowing company came in at 8 o'clock and we have a blizzard happening, and they did a good job, but at 9 o'clock, all of a sudden we got 2 or 3 more inches, if you put down in your log that the guy came at 8 o'clock, he certainly can't come back at 9. When and if a court case happens, your log will show you made the best efforts. He was there at 8 o'clock. There was more snow at 9 o'clock, and he's just not going to be able to come back. But it's you maintaining the walkways, making sure they're not slipping, making sure things like gutters and the leaders that come down drain away from the house, because we're going to have ice, and then it's going to warm up, and then it's going to freeze again, and that's where we're going to have slip and falls. Another thing for companies is the walkways and the driveways. Make sure there is as even and as straightforward as can be. Someone at night in an unlit area, or someone that might even be a little clumsy, hits a little raised area and trips and falls, there we have a liability suit.
Okay.
So I think it's some, things like that to help reduce a property damage claim or a liability loss goes a long way in, keeping kind of the claims process clean.
Yep. Okay, good. Perfect. All right. Excellent. Well, John, I really appreciate everything that you said because, in our property management course, we teach people about regular maintenance of your properties. And not only will it allow all your equipment to last longer, it keeps your building safer and keeps your tenants safer, which always is the goal on that, for sure.
It absolutely is, yep.
So you cover, so at ACBI, you cover property insurance. What types of insurance do you cover?
Well, it really runs the gamut. I'm kind of a generalist, so I'll do personal insurance, whether it's auto or home, investment properties. I have a good book of business of business owners, whether it's contractors or restaurant owners or just building owners through lessor's risk. And we have if anybody ever had any questions on life and health insurance, we have some folks here that just handle that because it's so complex, and they do a terrific job. So, as I always say to everybody, I'd love to write everybody's insurance, but, I am beholden to CT REIA because of what they do and how they do it. They're there to educate folks. They're there to have them make as much money as they can, but to do it properly. And that's my goal. I'll answer any question anyone has, and if it turns into some business for our agency, terrific. But I want to make sure, as you folks make sure, that there's no mistakes, no bumps in the road, or we try to minimize any of the mistakes, so it helps with the whole process.
Absolutely. Yeah, and thank you so much. You've taken care of our members for a number of years now. We really appreciate that, and appreciate your support for sure and your expertise. So, again, if you have any questions at all, call John at his office at 203-254-4587. Or if you forget all that, just go to the CT REIA website and go to the Investors Corner and look up under the service directory under insurance, and you'll find John. Or just keep attending our monthly meetings, because you'll see him there at every single meeting. So, hey, John, thank you so much. This is really great information for all of us, and I really appreciate you taking time out of your busy day to take care of this with us.
Well, thank you for the invitation. That I really appreciate. Thank you.